The information presented on this program is provided for informational purposes only, without warranty of accuracy, completeness, or suitability for a particular purpose. This program is not intended to be and does not constitute financial, investment, legal, or tax advice. This information is general in nature and not specific enough to be construed as advice. You should not make any decision based on the information presented on this program without independent consultation with an appropriately licensed professional or competent advisor. Investment in securities or the market involves a potential risk for loss of principal. Trading, therefore, may not be suitable for all listeners. Annuity guarantees are based solely on the financial strength and claims paying ability of the issuing company. Withdrawals of growth from annuities may be taxable as ordinary income in the year it is taken. Individuals should review contracts for specific details of the product's features and costs.
For millions of Americans who retire every year, the task of ensuring that your money is working hard enough to provide you with a consistent paycheck can make the job of working for that paycheck seem easy. Retirement doesn't signal the end of financial worry. In fact, for the majority of retirees, it's just the beginning. The assets you have built must be able to provide you and your family with financial security for all the years to come. That's why you need a game plan for retirement, making sure you have a plan and that your money is working hard to provide you with an income you can depend on. This is your game plan for retirement.
And welcome into Your Game Plan for Retirement, the show that challenges some of the traditional financial planning concepts and outdated conventional models for building for financial and retirement success. We talk about the income allocation model and always check in with your local income allocation advisor on the program. Ralph Grauso from ASC Financial for a retirement built to last joins us on the program again. Ralph, welcome back into Your Game Plan for Retirement.
I always look forward to these times and being able to give out information to our listeners that we believe are vital for them in making sound financial decisions, particularly during their retirement phase.
Ralph, we know that the decisions that we are making, even early on in retirement, can have repercussions and consequences that will affect us for years to come.
Absolutely. And, we look at people today, they are making financial decisions based on missing pieces of information. Some of them are making decisions based on misconceptions and myths. And so we just welcome the opportunity to bring sound information that they can take to decide what is the best course of action for their situation.
Well, again, we want to mention as we start out the program that the team from ASC Financial Group right here in Northeast Pennsylvania, the Lehigh Valley and the Poconos, strive to help the residents and the listeners in this area have a retirement that is built to last through breaking through some of the misconceptions, some of the myths here on the program, but also as an extension of this information and education, offering to you an opportunity for a complimentary financial and retirement review. And if you would like to take them up on that offer or even just ask a couple questions about concerns that have been bothering you, pick up the phone and give a call to ASC Financial Group at 800-939-8633 anytime during the course of the program or after, and a member of the team will talk with you about your financial questions and concerns or even set up a time to help you review and evaluate your game plan for retirement, all on a no-cost, no-obligation basis. The number again is 800-939-8633. That's 800-939-8633. And Ralph, you're mentioning here that there are a lot of myths or misconceptions under which the pretense people are making a lot of uninformed or misinformed financial decisions and choices when they are entering into or nearing retirement. What are some of those misconceptions that you think are maybe most prevalent or most important for us to realize and debunk here on the program?
We could probably spend a couple of days on this, but one that comes right to mind off the top is the fact that there's this myth out there that if you're in a mutual fund type of investment and you stay in and ride it up and ride it down, you're going to average 8 or 9% a year. And that is unfortunately a myth. They take those statistics. I believe it was the Wall Street Journal a couple of years ago had a great article getting realistic on returns. And basically that 8-9% return was based on the S&P 500 stock index from 1929 till 2015. And I don't know too many people that are in retirement for 80 some odd years. In actuality, you look at the last 15 years, it's more like 5.5% as a rate of return. There are probably fees associated with that return, and that's the gross rate. We need to subtract the fee so that we get a net rate of return to really evaluate, is that the type of investment and risk I want to take for that type of return.
And even if a fund may indeed show over the previous year or 5 years or 10 years an average rate of return, again, mentioning that you do first and foremost have to subtract the annual fee from that return, whatever they're showing there. But Ralph, even after that, that may not truly reflect the actual results and the return on your money if you were invested in that fund over that time, because averaging works a little bit differently when it's actual money that we're talking about rather than just averaging numbers together.
If you look at the S&P 500 index return from 2000 to 2012, it would show you that there was an average rate of return of about 2%. However, if I started with 100,000, I end up with 96,000. So how could I have a positive return when I have less money in the account? So you're absolutely right. And what that leads to is the fact that once you get a negative return, that average return is really skewed. It's really not your real rate of return. And listeners have to understand that there's a huge difference between an average rate of return and a real rate of return.
Well, we are undergoing a fundamental transition when we are entering into retirement, and it may be time to rethink some of these myths or misconceptions, or even our fundamental approach to how we're handling our money, Ralph, because we are needing our finances and our plan to enact a very different set of goals for us once we are no longer earning a paycheck, aren't we?
Many people are coming to the realization that, while I was working, I was putting money into an account. We call that dollar cost averaging. They were putting X amount of dollars systematically in every month. But now that they're in retirement, we're now withdrawing that money. We're not making contributions. So this dollar cost averaging is no longer in effect. And now we have to look at returns as we're taking money out, sequence of return, which is what we spend a lot of time with on the book, Income Allocation. To receive a copy of this book, call 800-939-8633. It'll explain to you the danger and the detriment of sequence risk as it relates to our money in retirement. And what our listeners have to understand is that for many of them in retirement right now that are drawing income out, the next 3 years of their retirement can determine the next 30 years of whether their retirement's going to last or not. If we get losses in the next 3 years in an account and we're taking money out, that will totally devastate a plan. And so when we meet with folks, we put them through that exercise of showing their plan based on different scenarios and different sequences of return. And every time, Peter, when there's negatives in the early years, it is devastating over a long period of time.
And I think to illustrate just this fundamental difference, Ralph, in dollar cost averaging versus sequence of returns risk, you can imagine yourself as a department store or a grocery store and a shopper in that store. And as you are working and acquiring equities and investing in the market, trying to build up your account, it's kind of like if you go into that store and you see a product that you know you're going to want or you know you need to buy over and over again, whether it be bread or milk, and 1 week that is at regular price and the next week that price is marked down 50%, you might think about buying more of it when it is marked down to 50%. And that's how it works when we are acquiring those investments, while we are working, earning a paycheck and investing. But when we turn the corner to retirement, no longer are we the shopper, now we are the store itself. And there are times when, in order to move our product, we're going to have to discount that by 50%. So now we are selling our equities when they are on sale if the market turns down and not realizing as much profit or gain as we should. And when we make that fundamental transition, we have to find a way to stabilize the amount that we're going to be able to realize as far as an income for selling our assets, because our bills don't tend to fluctuate just because the market goes up or down.
Everyone goes through 3 phases of their money. First phase is accumulation, and that's typically taking place during our working years as we're contributing to retirement plans or savings plans. But as we enter into retirement, The second phase that comes into play is preservation. And then the third phase is distribution. And so many people, as they enter into retirement, are still focused on the accumulation phase. But in reality, they've already accumulated the money. We now need to preserve it. We now need to distribute it to them and then someday to their families in the best possible way. And it's the latter two, Peter, the preservation and the distribution that we see so many people lacking in their plans.
We've all heard this definition of insanity is doing the same thing but expecting different results. You've heard that before, right, Ralph?
Yes, right. Absolutely.
So
Yep.
I've been thinking about this. What about the opposite of that, which is truly more reflective of the transition and just how divergent these different phases of our financial life are? The wisdom from Wall Street tells us to maintain the same behavior, but we are doing something completely different from the time that we are earning a paycheck and contributing money to the time that we are no longer earning that paycheck and withdrawing money. Is doing something completely different but expecting a same result as far as being able to maintain our standard of living need to be questioned as maybe as an insane line of thinking or approach to how to maintain that comfort level and standard of living once we do retire?
Most of the advisors out there, folks that are talking to us about our money, are still focused on this buy and hold strategy that, basically worked very well in the 80s and 90s. But when we look at the markets from 2000 on, with the crash of 01-02, with the crash of 08-09, buy and hold no longer works. When we look at what happened in 08 with asset allocation, that model failed. We look at diversification, that model failed. And so we have to take a look at strategies that are more in tune to what is happening currently in market conditions, and as it relates to folks that are retired and needing income from their portfolios.
Well, we are in a fundamentally different economic environment, and many people in that range of baby boomers are making this transition into a fundamentally different phase of their financial life. This new generation of retirees does need new thinking on how to build for financial and retirement success. We know that the market has grown over time, but in our time that we need our assets to work for us, we need stability, we need predictability, we need to know exactly what we can depend on our assets providing for us and the job that they will do. And that is part of what ASC Financial Group can provide you in a retirement built to last, is a game plan for retirement that is built on predictability and stability, a foundation based in the principles of income allocation. And Ralph, you offer the opportunity for folks to understand this new economic environment and the transition that they will be making into and throughout retirement, and help them formulate an investment and income strategy for retirement that will help them achieve their goals with more predictability and stability, and that they know they can depend on regardless of the market environment.
We do something called a 3-step review. And in this 3-step review, it's a process, and each step is extremely important. First step is what we call our discovery phase, where we take a look at what is our plan. We are asking questions, getting ideas of goals, getting ideas of what type of income we're going to need, maybe doing a budget that will help us determine what our income requirements are going to be, and just getting a better understanding of what is important to that person that's coming in for that review. Then what we need to be doing is taking a look at steps that are going to enact and going to put this plan into some type of action, where we're going to make some recommendations, where we're going to make some suggestions as to what they can do to achieve their goals and objectives. And so that second stage is really where we present ideas to specifically achieve those goals. And then finally, the third step is actually our plan of action being put into effect. We're going to be using strategies to reduce risk. We're going to be using strategies to reduce taxes and fees. But basically, we want to eliminate uncertainties. We want to provide confidence so that people know that I have a retirement built to last, regardless of whether we have another 08 scenario, regardless of whether inflation rears its ugly head, regardless of any type of things that can happen in the economy, we want to make sure we've got predictable income coming in that we can count on month in and month out. And that's what our 3-step process reveals. And you simply can take advantage of that by giving us a call at 800-939-8633. And there's no cost, there's no obligation. We have 2 offices, Peter. We have one in Allentown that services our Lehigh Valley listeners. And then we also have an office up in Bartonsville that services our Pocono listeners. So very convenient, very easy to get to both offices. And, I would highly recommend that somebody right now that's listening, you're nearing retirement, maybe you've just retired within the past year. Now's the time to put a retirement plan built to last together. Peter, the challenge used to be making it to retirement. The challenge today is making it through retirement. Because when we see these life expectancies, you take a married couple age 65, there's a very, very good chance that one of them may be celebrating their 90th birthday. And so the fear of running out of money becomes paramount, and we need to take that risk off the table.
Well, folks, for a retirement built to last, give a call to ASC Financial Group. Ralph Grauso, Josiah Grauso, and the rest of the team there will help you make sure that your game plan for retirement is working to help you achieve your financial goals into the future and maintain your comfort level, your standard of living, giving you more peace of mind and relaxation. It's a painless process. In fact, it's a preventative measure to avoid pain in the future, the pain of falling victim to some of these financial myths and misconceptions, identifying potential red flags and roadblocks in your way to the progress to achieving your financial goals and addressing those with an informed and educated approach. That's what that retirement built to last is all about, and that's what that 3-step review process helps you achieve. Again, ASC Financial Group, Ralph Grauso that you hear on the program, your local income allocation advisor across the Lehigh Valley and the Pocono. Give them a call at 800-939-8633. to take them up on that excellent offer. Again, that's 800-939-8633. And we do have to take a quick break, an excellent opportunity for you to place that call to ASC Financial Group for a retirement built to last. Again, the number, 800-939-8633. We'll be back in just a moment. We've reached the holiday that is the most accurate representation of retirement. Why? Because it's both terrifying and exciting at the same time? Well, that's true, but no. It's the candy. How is Halloween candy like retirement, you might ask? This Halloween, as you start out the night looking at your full bowl of candy ready to give out to trick-or-treaters, I want you to imagine that that is your retirement nest egg. So do you begin the night maybe being a little conservative, only giving out one piece per trick-or-treater because you want to make the candy last for the rest of the night? And by the end of the night, you have lots of candy left over that you end up eating yourself? Whew, that's not good for the waistline. Or do you give away too much too early and therefore are forced to turn the light out and end the night? This is a perfect illustration of what it's like to try to budget for retirement. You have a set amount of candy and an unknown amount of trick-or-treaters. How do you budget? How do you have a plan to make sure that each trick-or-treater gets the right amount of candy and that you have enough to last for each and every one of them? Without an income plan for retirement, that is exactly how your nest egg will be treated. Just a guessing game. And you may end up being too conservative, not enjoying yourself or doing the things that you'd like to do, and end up leaving behind money that you could have used and enjoyed. Or you might spend too much and run out early. That's why it's important that you have a retirement income plan utilizing an income allocation. This is a plan that ensures no matter how many trick-or-treaters show up or how many years you need your nest egg to last, the income will be there to continue providing the same steady ability to cover your living expenses. Because the most terrifying thing about retirement might be the fact that if you do run out of candy, you're not just going to turn the light off and end the night. To have an income plan specifically designed for you utilizing income allocation, contact your local income allocation advisors. Ralph and Josiah Grauso and the team from ASC Financial Group would be happy to talk to you. 800-939-8633. That's 800-939-8633. We hope you have a safe and happy Halloween and that your bucket never runs empty in retirement. And welcome back into Your Game Plan for Retirement, because a new generation of retirees in a new economy needs new thinking on how to build for financial and retirement success. And we are talking with your local income allocation advisor. He is Ralph Grauso, president and founder of ASC Financial Group, across the Lehigh Valley and the Poconos, your local income allocation advisor and resource for the type of information that you hear on this program. And again, you can reach ASC Financial Group for a retirement review and a retirement built to last by calling 800-939-8633. That's 800-939-8633. Ralph, we've been talking about this fundamental transition from our working career to retirement and how vastly different our financial needs are going to be. Are there any things that you see are commonly missed or overlooked that when we are planning for our retirement, we really need to be considering and aware of?
I think the main thing is, while we were working, we're making financial decisions along the way. But as we get into retirement, the main thing we have to take a look at, and where I see a lot of people not realizing as they get into retirement, is what type of risk, whether that's market risk, inflation risk, what type of risk are they taking as they move into retirement? And Peter, so many times we meet with folks and they bring in their statements and they're 63, 66, 70 years old, and they have the portfolio of a 40-year-old. And they have a portfolio that is just laced with a lot of aggressive investing. And I understand that part of that is due to the fact that the alternative in the banks and in safe money, we're really not earning any interest. But to start investing aggressively when we're in retirement is going to lead to disaster, because eventually whatever goes up is going to come down. And I just see that folks are not understanding the risk that they take. And one of the things we do in our three-step process is what we call a stress test, where we take someone's existing portfolio and we take that portfolio and put it through an 08 scenario. And in many, many cases, we're seeing significant losses that most people do not want to endure or can even afford to endure. So that's where I see the first aspect is they're not understanding the amount of risk that they're incurring in their present plan.
And folks, if you would like to have a better understanding of how you are positioned and what you could potentially lose if there was another market downturn through that three-step review process and the stress test on your portfolio, Ralph Grauso and the team from ASC Financial Group can educate you on how you are positioned and what you may stand to lose. You need to have a good understanding of that. Pick up the phone and give them a call if you would like to have that understanding. 800-939-8633. Again, that's 800-939-8633. 8633. A lot of times, Ralph and the team can show you alternatives to reduce or eliminate unnecessary risk from your portfolio while still making reasonable rates of return, because lazy money is another pet peeve there at ASC Financial Group. They do want to see your money working hard for you, but they don't want to see you taking unnecessary risks. So finding that proper balance and making sure that you are aware of the risk that you are taking, that is part of that review process and that stress test. And if you would like to have that better understanding, pick up the phone and give a call, 800-939-8633, the number to reach ASC Financial Group for a retirement built to last. Again, 800-939-8633. Ralph, I think that a lot of people are maybe trying to make up for lost time or didn't start saving early enough or don't feel like they've made the financial progress that they should have been making and therefore are swinging after the fences. Maybe they're aware of the amount of risk that they are taking, but they are overcome with the potential for reward or the need to try to catch up and make huge gains. But Ralph, a lot of times by taking that unnecessary risk, we're going to lose more ground than we're standing to gain, aren't we?
We have to understand that whenever we take a loss, we have to basically double that loss just to get even. Let me give you an example. If I've got $100,000 and I lose 50%, which is what happened in 08 by and large, that $100,000 is now worth $50,000. Even if the account goes back up 50%, I'm only at $75,000. And so to get back to my original 100, I basically got to double my loss. And really, when we put a plan together, that's the thing we have to take a look at. tell me, what is the worst case scenario? What if '08 is repeated? And in my opinion, I don't think it's a matter of if, I just think it's a matter of when. We've had a recession about every 5 years since the beginning of 1900. There's been 22 recessions over that period of time. And, we had the market crash of '02, a couple of years later, '08. And I believe we're just teetering right now on another significant correction, another crash in the market. And I think sometimes people get kind of immune to thinking that can happen again. But if it does, or when it does, it could be devastating to retirees. There's an article that was written not too long ago talking about two-term presidency. At the end of every two-term presidency, there's been a significant correction in the market. And I'm not saying that's going to happen by the end of this year, but history typically repeats itself. Markets go through cycles. And when we look at the instability and volatility out there, I think we have to start looking at strategies to protect our money.
Well, folks, if you would like to understand the amount of risk that you hold and is inherent in your investments and in your portfolio, I highly recommend that you take Ralph Grauso and the team from ASC Financial Group up on this excellent offer for a financial and retirement review and evaluation of your portfolio and that investment stress test, so you can understand the amount of risk that you hold and what you would stand to lose if we did have another market correction. And again, to take them up on that offer, all you have to do is pick up the phone and give them a call for a no cost, no obligation, completely complimentary financial review and evaluation. 800-939-8633. That's 800-939-8633. Across the Lehigh Valley and the Pocono, they are your local income allocation advisors. They are a team and a family approach there at ASC Financial Group and will help you with your game plan for retirement to make sure that you have a retirement built to last. Ralph, I think there are a number of measurable benefits that people will realize by undergoing that thorough 3-step financial review process. Can you hit and highlight on maybe the top 3 or 4 key advantages that people will leave that review having realized?
Well, number one, I think they'll have a realistic outlook of where they are and where they're going to be. What is their goals? I think just having those kind of discussions are very, very profitable. But more than anything else, I think what it's going to lead to is peace of mind, knowing that I've got a plan that I'm putting together that's going to protect my money, that's going to give me predictable income, that's going to give me the opportunity to take advantage of different changes in the economy and in the financial markets, giving me flexibility. So I think all of those things are important. Liquidity. What if I need some money down the road for whatever reason? So I think just having a comprehensive game plan, knowing what direction I'm going in, is going to just lead to a lot more peace of mind.
Well, folks, if you would like to have that confidence and peace of mind with the ability to relax and enjoy your retirement rather than consistently and constantly worrying about your money and your finances and how long you can make it last, pick up the phone and give a call to ASC Financial Group for a retirement built to last. 800-939-8633, the number to call. Again, that's 800-939-8633. Ralph, we're just about out of time on the program for today, but we always appreciate you being here. It's good to talk with you again here on Your Game Plan for Retirement.
Peter, I always look forward to these times again where we can give information out that are helpful to folks and give them opportunities to learn and opportunities to meet with us so that we can put a retirement plan together that will last.
And again, folks, the number for that financial and retirement review, 800-939-8633. We look forward to talking with you soon on Your Game Plan for Retirement.
The content of this radio show is provided for informational purposes only and is not a solicitation or recommendation of any investment strategy. You are encouraged to seek investment, tax, or legal advice from an independent professional advisor. Any investments and/or investment strategies mentioned involve risk, including the possible loss of principal. Advisory services offered through Brookstone Capital Management, a registered investment advisor.
Ed Slott's Elite IRA Advisor Group is solely an indication that the financial advisor has attended training provided by Ed Slott and Company. Past biannual examinations on material covered at conferences conferences and in webinars and met other membership requirements and does not constitute an endorsement of any kind. Ed Slott's Elite IRA Advisor Group members pay a fee for the educational programs that allow them to be included in the Ed Slott's Elite IRA Advisor Group. Membership does not guarantee investment success. Fiduciary duty extends solely to investment advisory advice and does not extend to other activities such as insurance or broker-dealer services. Advisory clients are charged a quarterly fee for assets under management, while insurance products pay a commission, which may result in a conflict of interest regarding compensation.